This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Global oil prices rose on Wednesday, boosted by China's pledge to support economic growth, tighter supply from Russia and on lower weekly U.S. crude oil inventories. Brent futures rose 9 cents, or 0.1%, to $79.72 a barrel at 0010 GMT, while U.S. West Texas Intermediate, WTI, crude was steady at $75.75 per barrel. China's top economic planner pledged on Tuesday that it would roll out policies to restore and expand consumption in the world's second-largest economy as consumers' purchasing power remained weak.
The big three oilfield services, OFS, companies will likely report higher profits for the second quarter as resurgent demand in international markets and strong offshore drilling helped counter tepid activity in North America. Baker Hughes, Halliburton and SLB are set to post a combined second-quarter adjusted profit of $2.04 billion, according to Refinitiv data, compared with $1.27 billion in the year-ago quarter. Oil and gas majors, who rely on the service providers for drilling and formation evaluation, well construction and completion services, are reinvesting record profits generated after Russia's invasion of Ukraine disrupted the oil market to intensify the hunt for new offshore and international sources.
Moving on to the top news in the energy sector.
Global oil prices edged down on Wednesday, after opening higher at the start of Asian trade, as markets weighed U.S. demand concerns against China's pledge to support economic growth, tighter Russian supply and declining U.S. inventories. Brent futures slipped 22 cents to $79.41 a barrel at 0403 GMT, while U.S. West Texas Intermediate, WTI, crude fell 32 cents to $75.43 per barrel. There are many positive drivers for oil prices now on the demand-supply front, and while we expect WTI to rebound to near $80 a barrel, this does not signify a bull market because global central banks' dovish stance still represents a retreat of risk appetite, said CMC Markets analyst Leon Lee.
An ongoing energy crisis and an economic downturn is expected to slow global power demand growth in 2023, but a probable rebound in 2024 means more renewable capacity needs to be developed, the International Energy Agency, IEA, said on Wednesday. The global growth rate for energy consumption is set to slow to slightly less than 2% in 2023, down from 2.3% in 2022, which was also down from the 5-year pre-COVID-19 average of 2.4%. The Paris-based agency predicted renewable energy would cover the expected growth this year and next, and power from renewable sources would exceed 1/3 of the total global power supply for the first time next year.
Next, we have the top news in metal markets.
Indonesia's export tax rates for copper concentrate will rise to a range of 5% to 10%, according to a new regulation, as the government tries to push miners to process metals at home rather than export raw minerals. The tax is part of the government's bid to drive smelter construction in Indonesia, with the aim of increasing domestic processing to get more value from the country's mineral resources. It also banned exports of raw minerals in June. However, it allowed several companies whose smelter construction is more than 50% to continue exporting mineral concentrates until mid-2024 if they pay the export taxes.
Dalian coking coal futures climbed to their highest in nearly 3 months on Wednesday, as mining suspensions in China's Shaanxi province stoked worries about supply of the steelmaking ingredient. The most traded September coking coal on China's Dalian Commodity Exchange rose as much as 3.2% to 1,488 yuan and 50 fen, $206.49 per metric ton during morning trade, its highest since April 25. Shaanxi Luan Environmental Energy Dev Company said on Tuesday its mining unit has halted production from July 16 after an accident caused 1 death. We will now look at the top news in the agricultural sector. Chicago soybean and corn futures gained more ground on Wednesday, with forecasts of dry weather in the U.S. Midwest supporting prices. Wheat rose for a second session, as Russian airstrikes damaged infrastructure at the Black Sea port of Odessa, a day after Moscow quit the export deal that facilitated Ukraine crop shipments. Forecasts of dryness for rest of July and early August for U.S. for corn and beans is supporting prices, said one Singapore-based trader. The situation in Russia and Ukraine is expected to reduce grain and oilseed shipments.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.